Welcome. Good morning, good afternoon, and good evening wherever you are. We're just getting started, and while we're all getting situated and making sure we leave a little bit of space for latecomers, we're going to put up a poll on the screen to better understand who we're talking with today. You should also see some webcams. We've got our three panelists up here and ready to go. We've got Shweta, Christy, and Nancy. And so you should have just seen something pop up, a quick poll. Who are you? Who are we talking with today? Please select one of the following. Are you somebody who works in government? Are you somebody who works in the private sector? Are you somebody who works for a development organization? Do you work in academia or something else? Looks like just over half of you have voted, so I'll leave it up for just a few more seconds to make sure we can get everybody voting who's just joined us. Welcome. All right, the majority of people have selected something, so let's go ahead and show the results of the poll. Looks like we've got overwhelmingly, our participants are coming from the private sector and development organizations. We've got 38% from each of those, only 3% from government, 13% from academia, and 9% from others. So hopefully those of you who selected other, you'll be able to tell us where you're coming from when we get to the Q&A portion. We'd also love to better understand where you're working so that we can be sure that our conversation has relevance for the region you're most interested in. So we're going to put a second poll up on the screen. And while you're answering that poll, let me introduce myself. My name is Sonia Kelly. I'm Director of Research at the Center for Financial Inclusion. The Center for Financial Inclusion is an institution that challenges and engages the industry and protects and empowers consumers. We're particularly interested in this topic because it has huge relevance to the future of financial inclusion, and it's a topic that we're hearing a lot of our audience is interested in as well. I hope my introduction gave you a little bit of time to select one of those regions. So I should mention we only have five possible options to put in this polling software. So I know that these are very broad categories and perhaps not fair to everybody, but I hope you were able to select one of the following. And those of you in Australia and New Zealand, I'm just realizing that, we don't have an Oceania category. Feel free to select Asia and the Pacific, perhaps. So it looks like most of you have made your selections. Let's go ahead and post the results of that poll. Looks like we've got 39% of people coming who primarily work in Africa, 8% in Asia and the Pacific, 13% in Latin America and the Caribbean, 10% in North America and Europe, and 30% in global, which tells me that we need to do a better job of putting these options in, or maybe 30% of you truly are global in focus, and that's interesting for us as we structure our conversation. So welcome. As I said, my name is Sonia Kelly. I'm the Director of Research at CFI. Before I introduce our panelists, I'm going to go over a few housekeeping details. First, we've muted the participants for the presentation, but we're going to call on you individually if you raise your hand. So you'll see on the right-hand side in that little menu, there's an icon that looks like a hand, and that's somewhere you can raise your hand. You can also use the chat function to ask questions, or you can use the questions function, and we're going to be monitoring both of those things. In both the chat function and the questions function, we can respond to you either by text, or we can ask you if you feel comfortable asking your question online, and we'll do that as we get further into the event. I should also mention we're recording this session and we'll be sharing it on our website afterwards for those who wanted to participate but were unable to do so. And we have put all of the handouts, we've put all the reports that we're going to be discussing today in the handouts section of the GoToWebinar software. So you'll see there in your menu bar on the right, there's a little section that says handouts, and there are 3 reports in there. Those 3 reports are the primary focus of our discussion today. Finally, for those of you calling in by phone without these features, please feel free to be in touch with us. You can respond directly to the email you received or ping us on social media, and we'll be happy to follow up with you either during this call or afterwards. We're also using this webinar function, but this is a sort of an experiment for us. So please bear with us if we have technical difficulties there, and if we have to, we'll just switch back to using primarily audio. Before I turn to our panelists, I'd like to turn to our Managing Director, Elizabeth Ryan, who's here in the room with us, just to give a little bit of context. Beth, why is this topic important? Why is it important for us to think about SMEs as we focus on financial inclusion? Beth?
Thanks, Sonia. This webinar really represents all parts of Accion coming together, and I think it's a somewhat of a serendipitous suggestion that, or serendipitous occurrence that we all started working on the SME topic at the same time. But this represents Accion Venture Lab, it represents Accion's technical assistance arm, and it represents the Center for Financial Inclusion. All of us, sort of independently of each other, began working on SME, and I think it's because clearly it's a continuing topic of importance because of the importance of SMEs to economic growth among people at the bottom of the pyramid. They really are the engine of economic growth at that level. And for very many years, I think this has been a somewhat stagnant field where there has not been much innovation. But in the last 2 or 3 years, we've seen a huge amount of innovation in techniques for understanding and lending especially to SMEs, and you'll hear about some of that. But going along with that, it's necessary to continually refresh our understanding of how SMEs actually work, and so the work by Christy Stickney really helps us do that. So we have a very broad-ranging look at SMEs and how to support them.
Thanks, Beth. And certainly, as Beth sort of insinuated, this is not a new topic, but it's an important topic and one that I think is gaining attention from the funding community and the development community, and the overwhelming response we received to the invitation to this webinar, I think, is evidence of that. So we just put up a slide that helps us to visualize what we're talking about here. So a lot of times when we talk about micro enterprise, we're talking about a single entrepreneur or a couple of entrepreneurs working together, and that has been the primary focus of microfinance. But the SME sector includes very small enterprises, and medium-sized enterprises, anywhere from 5 to 250 employees. So we're really talking about a wide variety of entrepreneurs here. This is a sector that has historically been underserved. It's been called sometimes the missing middle of finance. I think that was a phrase coined over a decade ago, and it spans from the informal to the formal sector. And so we're not just talking about formally registered businesses, but a lot of different businesses. The larger ones may be more formal, the smaller ones may be less formal, but it really is a spectrum. I should mention that this image is from Christy Stickney's report, which you can see in your handout section. And let's go ahead and turn to Christy first. The focus of Christy's research was on emerging SMEs. And so these are the institutions that aren't SMEs yet, but they're growing quickly. And she wanted to pull out sort of the positive deviants, the enterprises that were growing quickly, and figure out why that was happening. Was it something to do with the entrepreneurs themselves? Was it something to do with the way that finance was being offered to them? Was it some training or education they had? So Christy went to 3 different countries to do research on this question. Just by way of introduction, Christy is an independent development consultant. She lives in Costa Rica. She's been engaged in microfinance and housing finance since 1993. And she's lived throughout Latin America and the Philippines. Christy, just as by way of introduction and allowing you to give a brief overview of your research, let me just ask this question. A very small and modest proportion of entrepreneurs are making the transition from micro to small enterprises. In fact, my understanding from your research is that You surveyed a lot of entrepreneurs, but only found a small proportion of those entrepreneurs that were growing quickly and fit that criteria. So how can we as an industry change this? What are MFIs currently doing to address this? Go ahead, Christy.
Yeah, thanks, Sonia. So it's a huge question, I think, that many of us are grappling with, is how to increase these numbers that are very small, especially among those that are arising, entrepreneurs and enterprises arising out of situations, contexts of poverty. So I was looking specifically at clients of microfinance institutions, and one of the key findings or outcomes from the study, do you want to put on the next slide, Sonia? Thanks. Was identifying what I call growth entrepreneurs. These are owners of higher growth businesses. And they, this group emerged, there were about 20, they comprised about 25% of the entrepreneurs that I interviewed as part of the study. And what was interesting is they had a set of very, common set of characteristics that they held between them. One that's kind of a defining characteristic is that they're visionaries. They have a clear vision of how to grow their enterprise. They can see and describe very tangibly the next step they want to take, sometimes a series of steps in growing their business, and they're actively pursuing this. Another defining characteristic is that their employers, and specifically they have incorporated non-family members into their business. They've done this successfully, which is overcoming an important growth hurdle, and I'll mention that in the next slide too. Another characteristic is that they're focused. They devote their attention and their resources to growing one single business, and they're not diversified into a variety of different enterprises or investments or income generating activities. They're very, very focused and directed. And a fourth characteristic is their level of organization. They keep financial records, which is not necessarily common among micro entrepreneurs and those rising out of situations of informality. So they're more organized, they keep financial records, and they tend to increase their administration as their business grows. So what this offers us, I would say, in helping to approach the question you raised, Sonia, is it gives us a picture of the who. This describes a group of entrepreneurs that are really poised to grow their businesses further, and I suggest would really maximize services directed towards them, whether those are tailored financial services or support services such as coaching or training, value chain development, other types of business support services. This is a group, a subsegment of entrepreneurs that I feel would really make best use of something like that. So in the next slide, this highlights another kind of key outcome from the study, which is rather than a specific growth progression or a path that entrepreneurs journeyed on or faced as they grew their businesses, what emerged were more a set of common hurdles. So this slide highlights 4 different hurdles that were very common among the entrepreneurs I interviewed. The most common, is listed first, is acquisition of fixed assets. This step commonly involves purchasing a vehicle, equipment, tools, furniture, which become necessary as an enterprise grows. And it may be also a hurdle that's encountered various times as the enterprise reaches different stages of growth. And the main let's say, condition that needs to be addressed in overcoming this hurdle is acquiring a larger source of capital. And as you can see, quite a large percent of those I interviewed had actually successfully overcome this type of a hurdle because these were clients of microfinance institutions. They readily had access to capital even beyond working capital levels. A second growth hurdle that's very common is the incorporation of non-family employees. As I mentioned earlier, this, as a business grows, it's typical to bring on family members as a first step. But then to reach outside the family and employ outsiders brings on associated risks and costs. And it really takes both will and capacity on the part of the business owner to make this kind of a step and to make it successfully. So that's another very important, an important step. And as we can see, about slightly over half of the enterprises had successfully done this. A third hurdle is securing a strategic business site. So while microenterprises often begin in small, informal, sometimes precarious locations, on street corners, informal markets, borrowing a room of a family member's home, growth usually implies increasing space and even relocating to improve security, visibility, and really access to to markets, to customers. And so that usually results in a more strategic location, and that often brings greater permanence and also security for the business, or safety. So this step really requires an even greater amount of capital than fixed assets. And so that became, that securing that capital to purchase or equip a site became a significant hurdle for a lot of them. And as we see, about half had also overcome this one. And a fourth hurdle is then expanding to additional sites. So as businesses grew, they sought to expand their physical presence to new locations, largely to access new markets, again, new customers. And so in addition to requiring, again, a significant amount of capital to secure a site and to equip it, it also requires increased management capacities to be able to oversee multi-site operations. So those were the four challenges. And what I think these point to, so the former slide was kind of the who, these are the whats and hows. These are the steps or the hurdles, let's say, that the enterprises encounter as they grow. And so how we support them can probably be best addressed by looking at some of these hurdles. What kinds of financial services, what kinds of non-financial services can be tailored to helping entrepreneurs as they overcome these various hurdles.
That's great, Christy, and I'm hoping that we can get into some of those things as we move forward in our discussion. But I'd like to move on to the other folks we have so that we can hear from everybody first before diving a little bit deeper. Let me turn to Nancy. On your webcam, Nancy's name is Sonia Kelly because we happen to be in the same office and she's using my webcam. So I hope that's not confusing to you. But Nancy is the principal manager of knowledge and industry engagement for Venture Lab. She leads Venture Lab's efforts in identifying, analyzing, and articulating key trends and lessons that emerge from the work of the Venture Lab portfolio companies, and also other companies that they evaluate. So Nancy's really taking all of those important learnings and distilling them into lessons for the rest of us in the industry so that we can understand key trends as we move forward and so that we can have a handle on what innovation looks like in financial inclusion. So Nancy, the paper that you worked on, or the report that you worked on, was on innovations in MSME finance. Can you tell me a little bit broadly about the areas of innovative lending solutions that you identified as key to addressing this financing gap? And then we also had a question come in before the webinar from Frank Nieder, and I should mention that if you just reply to those invitation emails, I get those questions, and so I'm happy to integrate them into the webinar for those of you who join our webinars frequently. So we got this question from Frank Nieder on the effectiveness of these innovations in terms of cost to clients and cost to institutions compared to other providers in the market who perhaps aren't as innovative. So I'd love to hear your response to that as well as you talk about innovation.
Great, wonderful. Thank you so much for the opportunity, Sonia. Maybe just a quick background on Venture Lab for those who are probably not familiar. Venture Lab is an initiative from Accion that invest in at the seed stage. We invest in fintech startups that are looking for basically addressing the issues of bringing access and better quality of financial services to underserved customers. So we're always on the hunt for great innovations that can transform the market. We currently have invested in 30 portfolio companies around the world, and almost half are actually lending to small businesses around the world. We're very excited about SME finance to a lot of the sort of reasons that we've discussed before. There's, I think, approximately 2.3 billion funding gap just for SMEs in emerging markets alone. And so far, I think the traditional kind of the historical challenges why banks can't really or are a bit reluctant in terms of extending access to finance for SMEs are around the cost to serve. These small businesses, these micro businesses tend to take credits that are much smaller sizes, but at the same time, they require kind of a bit more hand-holding in terms of serving. They're also mostly informal or have less documented transactions around their businesses that can actually indicate one way or another their credit worthiness to banks. Hence, you know, this kind of small ticket size and high cost to serve have been a huge hindrance for banks in terms of serving them. What we're excited about is that we're looking at a lot of marketplace changes that are actually now inspiring these fintech startups to come up with new solutions to address this particular issue. As internet adoption, as smartphone adoption proliferate across the world, we're looking at digital footprints that are actually able to indicate, you know, just new sort of data points for those alternative lenders to be able to serve them. We're also seeing a lot of great initiatives from governments around the world, such as India with their India Stack. They're actually enabling technology to advance and for these startups to be able to serve small businesses better. So maybe we can go to one example around customer acquisition. So one, as mentioned, a lot of the times for banks, it's challenging to be able to acquire micro and small businesses customers at scale. But we're seeing actually models that are innovative, that are leveraging both technology and just smart business models that work on ecosystem relationships. They're actually enabling them to acquire customers at a much more effective cost and a quicker, scalable way as well. One example is our portfolio company that is based in India called iFinance. I identified what they call the industry cluster enablement methodology. Basically, they're saying that there are certain industry clusters in India that are kind of basically all in the same area. So if you're talking, say, around a shoe production value chain, so the guy who makes the lace, to the guys who actually does the tannery, the guys who does the sole are actually around the same area, just in terms of them being able to complement each other. And that's a great way for iFinance to actually be able to really understand that cluster, being able to build that kind of relationship on the ground, and being able to acquire them as a customers and at scale. And it's also great later on for underwriting, because then I was actually able to really understand what are really the business cycle around the shoe manufacturing industry. And everybody knows, everybody kind of knows each other in that cluster space as well. So it's great in terms of determining creditworthiness and credibility of the borrower as well. Similarly, in India, SME Corner is using an online platform that actually enables, say, if you're a if you're a small business owner and you're trying to find the best deal for a working capital, through SME Corner's platform, you can just fill in one online application, and SME Corner will then be able to offer you multiple best options from their partner banks. So it really saves time for a small business owner. You don't really have to go around to 10 different banks in person and try to figure out what are the offers about. So it's also a great way in terms of SME Corner helping banks to acquire customers. Also in India, which one of our favorite companies, which we have just exited successfully last year, is Vartana. Vartana sees the need for what we call affordable private schools in India. These are basically private schools, but with very affordable tuition that are complementing government public schools. These are basically small businesses as well in a sense, but because banks don't generally understand their model as schools, banks tend to overlook in terms of providing them with credits. So Vartana is very much focused on really understanding this model and then being able to really acquire customers through the education ecosystem by referrals from one school proprietor to another. And moving on, I touch upon this a little bit as well. We're very much excited around the innovations that we're currently looking at underwriting. This has been, again, a major challenge for banks to be able to really understand the creditworthiness of small business clients, because they're normally either thin file or have no file that can indicate what their business transactions look like. One portfolio company that we have in Mexico is called Confio. They're a purely online digital lender. They're able to actually extrapolate multiple data sources. I think they mentioned that they're using at least 5,000 different data points that are actually enabling them to underwrite a customer online. So all in all, it's a very quick and swift application and approval process. What's exciting about Confio as well, they're smart enough to actually look at this new regulation from the government of Mexico that is enforcing all micro and small businesses to digitize their e-invoicing. So there's now this one hub of e-invoicing directory that the government runs that really capture all these different transactions, sales transactions that MSMEs have been doing for the past years and so. And Confio are now able to tap into that and use that as an additional data point for them to really understand a potential borrower's credit worthiness. One of our portfolio companies in Kenya called Kopo Kopo is actually really interesting. They started off as a platform that enables small merchants in Kenya to be able to accept mobile money. I guess a lot of us are pretty familiar with M-Pesa, which is the most popular and highly successful mobile money system in Kenya. Before Kopo Kopo, most of the payments that happened through M-Pesas were actually a person-to-person. Through Kopo Kopo's platform, Kopo Kopo enabled then small businesses and small merchants to be able to accept M-Pesa payments from individual customers. And after a couple of years of operations, Kopo Kopo realized that by helping businesses capture this mobile payments that they're getting, it's actually also a great, basically a treasure trove for them to really understand Kopo Kopo's clients' business, and enables them to really understand, say, hey, how credit-worthy is this client? So a couple of years back, Kopo Kopo then advanced to providing an additional service called Merchant Cash Advance that they're offering to their businesses, using this captured mobile money transaction data that they've been helping small merchants capture for the longest time, to enable them to extend credit and underwrite these credits to their clients. Last but not least, we're very excited about the Tienda Pago model. Tienda Pago is currently operating in Peru and just expanded to Mexico. So they're using a relationship with fast-moving customers' goods distributors. So think of it as your Nestle, Unilever, Coca-Cola distributors. These guys have been delivering inventory to small mom-and-pop stores across the different sort of rural areas of the countries. What Tienda Pago is offering now is a working capital for these mom-and-pop stores to be able to purchase more inventory from, say, Coca-Cola, and then through the references of the Coca-Cola distributors. And at the same time, what they're doing as well is they're digitizing the whole process. Previously, a Coca-Cola distributor driver will actually have to deal with cash, because as they deliver, say, 3 crates of Cokes to a local mom and pop store, they'll need to actually collect the cash. But now Tienda Pago is digitizing that process so that for every inventory that is using a Tienda Pago working capital loan, Tienda Pago will just deal with the payments directly with Coca-Cola, and then later on the mom and pop stores will repay the loan through a mobile money platform. So all in all, we're very much excited to look into this different innovations as a way for them to just be creative and figure out what are really what have been hampering banks in terms of extending access to capital for small businesses, and to be able to do this in a more scalable and more cost-effective ways. So I guess to Frank's points about cost to customers, this is exactly really kind of for us, the dimension of acquisition and underwriting are really the 2 key dimensions where we see innovations can really address the issues of cost by using an purely online channel, such as Confi and Copo. They're actually able to really minimize the cost to serve. Because they're pretty early stage startups as well. What we're hoping is as they grow along, as they're actually being able to hone their data analytics better, they're able to scale. The interest charge for clients will also decline as they grow. So that's really what we're aiming for.
That's great, Nancy. And as you get more data about that, I think that would be something that would be really interesting to Frank and to the rest of our audience. We've had a lot of questions come in about these particular models. And before we turn to Shweta, if it's okay, Shweta, I'd just like to take a minute to address at least one of them, so we don't have all of these questions piling up at the very end. We want this to be more interactive than just a presentation style webinar. So I'd love to open up the line to Graham Seal. Graham has a question for you, Nancy, about different models for reaching customers. And he was specifically interested in innovations that help banks reach SMEs. So Graham, can you hear me?
Yes, I can.
Perfect. Go ahead and ask your question.
Yes, the question really relates to whether startups are focused on simplifying processes, digitizing processes, not just around acquisition, but for the whole lending life cycle. Mostly, I think you said at the beginning, mostly banks don't get into the SME lending because it just simply costs too much. So driving cost out of the process would potentially open huge amounts of credit.
Right. So yeah, we mentioned so some of the models that I mentioned. They themselves are balance sheet lenders, but something like SME Corner actually began with working very closely with banks and becoming an acquisition platforms for banks to be able to reach customers in a more cost-efficient way. So we're calling this model a marketplace model. Another model that we didn't mention here is also actually one of our portfolio companies in India called R2. What R2 is doing is basically helping to help banks and MFIs and other more traditional lenders to digitize their processes, equipping field officers with tablets and with back-end platforms that really tries to cut down the amount of paper-based work that is time-consuming, very much error-prone, to be much more digitized and much more automated. We really hope innovations like that would actually help banks to be able to drive down costs.
Thanks, Nancy. That was helpful. And Graham, did you have any follow-ups?
No, it's very helpful. I mean, lots, but
happy to chat offline as well.
Great. All right, well, let's go ahead and move on to Shweta. We can change this. Great. So Shweta works with GLASS, Accion's Global Advisory Solutions. She leads and manages Accion's technical assistance to the partners in India. She undertook a research effort last year looking at SMEs and particularly at the internal processes of financial institutions serving SMEs, and with a particular focus on women SMEs. So her research touches on a number of different topics, but Shweta, if I could ask you just to, in your introduction of your research, to hone in on some of the key products and services offered through the business correspondent partnership that you looked at that were specifically designed to better serve MSME clients and address SME challenges.
Sure.
Shweta?
Thank you,
Great.
Sonia. Thank you, Sonia. If I might ask to move the slide. Yes, thank you. Just a little bit about this study that we had conducted. It was this, we studied the lessons learned from a pilot between Swadhaar and RBL Bank, a business correspondent partnership, where Swadhaar was the front end responsible for sourcing and servicing customers, and RBL provided the balance sheet and the brand. So this is the study was from 9 months of this pilot, a very interesting study, and already showed a lot of success in this partnership. So to answer your question on what were some of the key products and services, Swadhaar, through this business correspondent partnership, actually offered and was able to offer an umbrella of products with flexible loan sizes and tenures, as we can see here from the slide. And it was really to meet the needs of these MSMEs at different growth stages, such as for working capital and for purchases of business assets. Other services that this partnership provided and Swadhaar provided was, as we know, most MSMEs actually lack collateral, and Swadhaar provided an unsecured working capital loan, which found huge demand, really because it did not ask of MSMEs to provide collateral. They lacked documents, and therefore by providing an unsecured and a quick kind of a working capital loan product, saw a huge uptake for especially these smaller sort of MSME enterprises. Really, and this kind of product was only possible because of the huge trust that RBL Bank placed in Swadhaar's underwriting expertise. RBL Bank, as you know, would have more conservative kind of credit and risk lending models, but it really leveraged Swadhaar's experience on the ground, its knowledge on the ground. Swadhaar had done this in the past. And what Swadhaar did then was to take the knowledge it had from its individual loans, package it, and lend to these MSMEs. The next slide, please. Thank you. As we have mentioned over here, some other features and services that Swadhaar provided was in terms of a non-document based evaluation. I think this was one of the key features really to target the MSME businesses. By non-document based evaluation, we meant that, as we know, that MSMEs lack formal documents, and in fact they might even lack credit history, or as we have seen very commonly at Swadhaar, they have credit history, but it's really poor credit history simply because they're not educated on how to close their loans, what does a credit bureau mean, etc., etc. So it requires an MSME lender to really look behind that history of that MSME. And so in doing so, what Swadhaar piloted was a non-document based evaluation, which used kind of a triangulated information from references, from very basic business records, from visual inspection of the client, the household, etc., to kind of make an opinion on the client's and the business's income and sales. And another key feature and a service that I feel Swadhaar provided to these MSMEs, which given the characteristics of these MSMEs, MSMEs, as we know, the owners, and we have seen from Christie's presentation just before, I mean, they might have, from what we've seen in India, about maybe 20, 25 employees, but they really don't have a person to stand in for the owner. So it's quite difficult for the owner to close their business, go back to the bank branch, fill in the paperwork, then you've got to come, visit, collect more documents, etc. So the key service here that Swadhaar is providing to these MSMEs is its wide branch network, door-to-door kind of sales services, and also to kind of reduce the cost both for itself as well as for its clients. It provides these digital channels for collection and repayment. So clients can simply, go to the bank account, withdraw their cash, which has been credited into their accounts. And at the time of the repayments, it's directly debited from their bank accounts. And I felt that these were some of the key. There are some others, as we have mentioned here in the slide, but I feel that these were some of the key kind of products and services that Swadhaar has offered to the MSMEs.
Thanks so much, Shweta. I'm going to go ahead and, again, we've gotten a lot of questions during your introduction to your research, and I'm just thrilled that the conversation is starting to bubble up, and I'm hoping that we can take advantage of that and have a rich discussion as we move forward. I'd love to turn to Veena Mankar. Veena actually asked a question during Nancy's presentation on mom and pop shops, but I'm assuming that she also has something to say about the research that Shweta just gave us an overview about. So Veena, can you hear us? Or rather, Veena, can we hear you, I suppose? Veena, I don't think the sound is quite coming through.
Now, can you hear me? I've just unmuted myself.
Yep, we can hear you. Go ahead.
Okay, I had some trouble signing in because I had a bad connection. So hopefully this is not broken up. No, I think Shweta has given a really good synopsis of what we did, but a couple of things that I would like to emphasize are that I think the fact that we shared the risk with the bank. So when we were in discussions with the bank as to, they were very skeptical about the underwriting process, or rather than skeptical, I should say that there were a lot of people at the leadership and senior management who were convinced that this was the way to go. But we had a little bit of apprehensions from the risk department who were not used to really evaluating risk without documentation. So I think one of the first, yeah.
Veena, I'm so sorry to interrupt you, but I should just mention that when Veena says we, she means Swadhaar.
Yes, that's right. Swadhaar agreed to underwrite, part of the risk. So the bank took over the first initial risk, which they felt would be a normal risk in an MSME transaction. And beyond that, if there was going to be any losses, Swadhaar agreed to bear that for a little percentage, and which, we both between the bank and us felt would be sufficient to cover any, extraordinary risks that could arise from the fact that these were undocumented enterprises. And after that, the risk was shared equally between the bank and Swadhaar. So this gave a lot of confidence to the bank risk department that, we really put our money where our mouth was, and that we would look at the underwriting very carefully and not just pass it on to the bank. The second is we looked very carefully through the bank's own risk policy, and in that it was very helpful that the bank actually seconded people from their MSME, very senior people from their MSME department to Swadhaar to manage this portfolio. And we were therefore able to highlight to the bank that which were the areas we were deviating from bank risk, which were the areas we were not deviating from bank risk. And initially we also capped the amount of portfolio that had more than a particular deviation from the bank's risk. And I must say, it's now been about a year, and the experiment has gone very successfully. The portfolio is performing much better than what we expected. I would say that, yes, it is still initial days because we've just had about a year of vintage. But we are at a stage where we have not had to absorb any more of the risk than we anticipated right at the start. The bank is now prepared to increase the limits for which we are doing such evaluations. I think many of you may be aware that we went through a demonetization event in the country, and for 3 months we actually capped or stopped more lending into this segment, only disbursed what we had already sanctioned. But effective February, we are back on track and growing the portfolio as we expected.
Thanks, Veena. That was a helpful summary of sort of where things have come to now. And then I think you also had a question on mom and pop shops when Nancy was talking, and how that works with FMCG, fast-moving consumer goods companies. Did you want to still ask that question as well?
Yes, I did, and I was interested to know where the relationships were best developed. Because in my experience as a banker, many times if you try to develop these relationships with the large FMCG companies, you actually get squeezed on price, and that doesn't reflect the risk at all that you're taking on. So I was wondering where they pitched their relationship.
Right. So for Tienda Pago, their main value proposition for the fast-moving, for the FMCG distributors is really by Tienda Pago being able to extend credit for inventory for their client mom and pop stores, that would actually increase sales for the distributors. And at the same time, the point that I mentioned about digitizing kind of that cash payment is also a huge value add for the FMCGs. In Latin America, it's quite uncommon for FMCGs to actually provide store credit for their mom and pop stores. They usually tend to shy away from providing sort of direct financial direct credit for their stores. So Tienda Pago is filling in that gap for the FMCGs. So all in all, what the FMCGs bring into Tienda Pago is that relationship, them helping to vet who are the mom and pop stores that are eligible, who are credit worthy, and also sharing what have been their historical purchase transactions with the FMCG. So that's very helpful for Tienda Pago in both acquiring the stores as well as in underwriting them. But yeah, I think for so far from the FMCG, I think they do see a huge plus in working with Tienda Pago for those particular reasons, them being able to sell more to the stores, and then Tienda Pago helping them digitize that, making sure that helping them actually making it cashless for their drivers and inventory people. Yeah, they have one less thing to worry about in terms of transferring cash.
Thanks, Nancy. And we've gotten a lot of these questions on who it is that's actually providing the financial service. And I find that to be really interesting because Christy was looking at customers of microfinance institutions. Shweta was looking at the BC model. Nancy, you're focusing more on fintech innovations. And so my question is, what kinds of institutions are best positioned to serve SMEs? Donna Katzen wrote in with a similar question to Frank's about, or sorry, a similar question to the one we explored earlier about from Graham about innovations that help banks reach SMEs. And so I would love for each of the three of you to answer that. What kinds of institutions are best positioned to serve SMEs? What's the most efficient model? Where, or is there room for everybody to play? Let's go ahead and turn to Christy because we haven't heard from her in a while.
Well, yeah, it's a great question. I think it really depends also on which segment of SMEs we're interested in targeting, because as we saw in the earlier slide, the SME sector is not homogeneous. It's quite broad. a sector that I mentioned in the report and really focus in, and I call emerging SMEs. They're really the very small enterprises, and they're emerging out of, they're growing within contexts of poverty and marginalization. And I think they really deserve, they're important for attention because they're particularly vulnerable because of the poverty context in which they're coming. But they're also highly valuable and have great promise because these will be the engines of economic activity within contexts that really need that. They provide the jobs, they'll provide the income, as well as purchase inputs, provide goods and services. So they bring dynamism to these economies. And so I'm inclined to think really that microfinance lenders, those that have that experience of working within those contexts, are uniquely poised to serve that specific group. That's something I would sense, given their firsthand, knowledge and experience of working within those contexts, and with the possibilities and challenges that they present.
Thank you. Shweta, do you agree? Do you disagree? What institutions are best poised to serve?
So, I mean, what we are seeing in India actually is this whole disruption of status quo. We are seeing a bunch of new players. There are new small finance banks. There are payment banks, and what we are seeing with these kind of microfinance institutions, which have now got these small finance bank licenses, is that traditionally they have been, having their feet on the street. They know this kind of segment. They have a door-to-door approach, etc. So I think that we are going to see a lot of players, and it may not be just one particular format of institution that might win. But even if you take Swadhaar's model, I think it is a winning mix. If you have the front end of an agile institution like Swadhaar, and you have the bandwidth, the brand, the balance sheet, a strong balance sheet, and the financial inclusion focus of a bank. So I think the market is huge. I mean, stats in India show that nearly 75% of MSMEs just have informal lending. So I see the pie just growing, and space for these various players, microfinance institution players having niche kind of lending or a target market, fintech, as Nancy mentioned in terms of SME Corner, New Growth, etc. The other portfolio companies lending to other MSMEs, and these kind of new age banks, small finance banks playing a role. I think each of them have their strengths, MSMEs are here to benefit from all that. So.
Right, and then so I think for us, we are looking at a huge funding gap that currently still persists. I think we were talking about more than $2 trillion funding gap. So there's definitely still a huge, basically a slice of opportunities for everyone to actually benefit from. I guess for us, banks definitely still play a huge role in terms of providing this funding as well through many different ways. Even working with fintech startups that we have on our portfolio, we see that a lot of the issues that some of our portfolio companies are facing in terms of scaling and for them to actually able to serve more customers is their access to on lending capital. So it's interesting because for these fintech startups, they're actually trying to provide credit to the MSMEs, but at the same time, them being a startup sometimes are actually hindered in terms of being able to access that affordable on lending capital. And this on lending capital is something that the major banks can actually help provide to them So, you know, there are many different ways for us in looking at how the ecosystem players can really benefit from collaborating with each other. To Frank's point earlier as well, we're looking also at more specialized startup players, such as those that are providing this back end or front end automation services for banks to be able to do more processes more efficiently. We're also looking at an emergence of a lot of data analytics companies that are actually able to help banks, microfinance players, also other fintech players to be able to conduct underwriting in a more accurate and a more cost-efficient ways as well. So all in all, we see it's still a huge opportunity. There's a lot of room for everyone to play there.
Thanks, Nancy. And I love that number, the estimated $2.1 to $2.3 billion funding gap. And that's something that you discussed in your report. And that, again, that's found in the handout section of the webinar. You can download that from there. We've had a question come in about the role of culture, and particularly the role of culture when talking about women entrepreneurs. Patrick Ulaya, who probably works in the Africa market, although he seems to have dropped off, so we can't ask him specifically, but he asked about specifically women in Africa, women SMEs, and the challenge of culture and of patriarchy. That's a challenging question to address without getting specific about markets. But Christy, I know that you were trying to look at women-owned SMEs, and you ended up finding you had some surprising findings about women in SMEs. And then Shweta, your focus group discussions were specifically focused on women-owned SMEs. So I'd love to hear from the two of you. What were some of your observations about women-owned SMEs and the financial institutions that serve them, and whether they run into these challenges in the specific markets you were engaging in?
Well, in terms of women-owned SMEs, the findings, I guess the outcomes from the study I looked at, which was in Latin America, specifically 3 countries in Latin America, it was a disappointingly low number of growth enterprises that were owned and operated by women, less than 10% of the ones I looked at, which seemed to me surprisingly low. Nevertheless, women were very involved in SMEs and growth enterprises as joint owners or co-owners with a male family member, usually their husband, but often a brother or a son. And so women were very much present, they just weren't the lead owner in the majority of the cases. And so they were often occupying more of an administrative role, running, keeping the books, handling customer relations, but in very few cases were actually the lead owners. And another interesting phenomena that occurred in several cases was that a woman would start a business, but once it really took off, that was when a male family member stepped in to run the enterprise. And I don't want to describe this as a kind of hostile takeover, because in general, my perception was that women were intentionally leaning out. They had family care responsibilities and priorities, and their decision was really to care usually for young children, but also for ailing family members or aging parents. And so that was weighing very heavily in terms of their decision and how they would participate in their business.
This is Beth, and what you say, Christy, just actually relates to even a 4th aspect of Accion, which is Accion in the US, which has just released an impact study on the loans that it makes to small businesses. And one of the big findings that it had was the percentage of the small businesses whose real business goals are stability rather than growth. And so you found that in Latin America, we find that in the US, and I think, you know, a lot of the aid and assistance and policy interest in SMEs tends to be focused on SMEs as growth-oriented. But when we start talking to entrepreneurs, the vast majority are looking at the SMEs as just the support for their livelihoods. And so I think we need to start giving more weight to and attention to businesses that are just fulfilling that function, because it's a super important one.
Yeah, that's a great point, Beth. And stability often implies diversification. So they're investing in multiple ventures that'll generate income and help weather, fluctuations from different enterprises.
Hi, Sonia, I can go ahead?
Yeah, of course, go ahead.
In fact, I had the privilege of actually seeing and learning from these women entrepreneurs from two different studies. One is from our pilot and our experience of Swadhaar's, really focused to try and focus on these women entrepreneurs. And another is a focus group discussion, which thanks to Goldman Sachs, it not only provided us funding, but then also access to these graduates from its 10,000 Women program, where they provide education, mentoring, support to these women entrepreneurs. So in fact, what we learned from these focus group discussions is that the challenges faced by these women entrepreneurs are not so different from their male counterparts. In fact, it's those challenges and more. So, or maybe more acute is what I meant. I mean, what we find in India is one, due to inheritance laws. Typically, the property is in the name of the male member, and after marriage, it is jointly held. So very often, if these women entrepreneurs have to actually access a loan, they have to then ask their spouse, they've got to get permission, and it's not always forthcoming. Another challenge that these women entrepreneurs mentioned is that very often MSME lenders tend to, or formal financial institutions tend to have the spouse or a parent as a guarantor. And this actually increases the hurdle to actually access a loan, especially the first loan of these young enterprises. Also, what we have seen is, and what was reported as part of that focus group, was that women, they're not as financially savvy as their male counterparts. I mean, they have less exposure to the formal financial sector. They have a lower level of financial education, and they kind of get overwhelmed with the mumble jumble of products and terms and conditions, and they don't feel comfortable enough to keep on asking and trying to understand these financial products. And these are important lessons for financial institutions. One last question, I mean, an important question that we asked of these women entrepreneurs were biases and cultural perceptions. So what we have found is also that typically the income from a women's enterprise is considered secondary to the household income. So institutions feel that if there is a family emergency, it is very likely that the woman would shut her business, and therefore they categorize women entrepreneurs as more risky. So these were some of our findings. I think we took some of these learnings, and what we have seen through the pilot with Swadhaar is that Swadhaar really put its focus on reaching out to these women entrepreneurs. It kind of called it out during the training programs to the relationship officers or the loan officers, gave a discount, a 2% interest rate discount, to kind of really bring that focus of women entrepreneurs. And they have about 13% of their portfolio are women entrepreneurs, which is quite good. I mean, what we've seen with most of other financial institutions, it's in the range of about 3 to 4%. And I think that could also be because, as Christy mentioned, really women enterprises are almost invisible to the financial lender. They are micro. They are largely in the service sector. They have they lack documents, formal formal documents, credit history. So really reaching out to them is more difficult, and they're just 10% of the MSMEs in India. So I guess we'll have to put in that extra effort if we have to reach out to these women enterprises.
Yeah, just to maybe a quick kind of story from Kopo Kopo. So we went to visit a couple of Kopo Kopo merchants last year in Nairobi. One interesting story was a hair salon owner. Her name is Rose. So she has been using Kopo Kopo as a way for her to be able to accept M-Pesa payments from her clients. And then later on learn about the cash advance, the working capital loan that Kopo Kopo provides. So it was interesting when she was talking to us, she mentioned that previously, before Kopo Kopo's product, she would try to walk into a bank and ask about working capital loans. And one of the first questions that she gets usually would be, where's your husband? Who would be your guarantor? But through Kopo Kopo, because everything's is automated, everything's digitized, her transaction data speaks for itself. So she doesn't have to actually, there's less buts. The technology somehow helps kind of cut through the bias of her being a woman, because Kopo Kopo can see through all this kind of catalog transaction data that she has on how creditworthy she is. So now Rose is able to expand to having a massage room in her hair salon, and her next step is she's saying that she's actually very much keen to open a hairdresser school. So I think for us, we're quite excited about the role of technology in helping women really prove their creditworthiness, or really prove their entrepreneurship skills through just basic data. The data speaks for themselves, and for these women entrepreneurs.
Thanks, Nancy. I love that story. And I should mention, as I did in the context of this discussion on women-owned SMEs, that every market is different. A number of you have been writing in and following up. John Owens, who's a CFI fellow and a consultant, wrote in and said, if you want to see women entrepreneurs and women-owned and women-led SMEs, take a look at the Philippine market. And certainly that is true based on what I know about that as well. Paul Chin wrote in that we're hearing that he's seeing in Jamaica upwards of 50% of microloans taken out by women, and that could mean a larger percentage of women-owned SMEs. And so, I think every market certainly is different, and as we talk about women-owned SMEs, we have to keep that context in mind. I'd love to turn now, based on some of the models that we've talked about, to the question of partnerships. Shweta, it's something that's certainly baked into the BC model that you discussed. Nancy, partnership seems to be a key feature of some of the innovations that you discussed as well. And then Veena Mankar had some follow-up to make about my question about who is best positioned to serve SMEs, and that probably wasn't a fair question, because, like you said, Nancy, it's a huge market opportunity, and there are probably really creative solutions that don't just have one institution involved. So with that question of what do partnerships look like in serving SMEs, let me turn to Veena and get her back on the line and get her take on that. And then we'll go ahead and ask Nancy and Shweta that same question.
Hi, can you hear me?
Yep.
Okay, so I just wanted to add that I think in India now we're really at a sweet spot. And I think for many years, Accion has been working successfully in other markets, but finding it quite hard in India to get banks to downstream to the MSME and microfinance market. Well, till a couple of years ago, even in the microfinance market, banks wanted to leave it to the specialized institutions and lend to the institutions. But in the last 2-3 years, a number of them have started their own microfinance operations and are now seriously looking at their own MSME operations, which are distinct from their corporate operations. And I think that is the key, because you need to separate the way that risk is looked at, perceived, evaluated, monitored, and tracked in a banking institution as distinct from corporate finance. And that I think the banks have finally realized. And today, with that willingness to look at the market, there is great potential for partnerships, and not only BCs, but I think partnerships with fintech companies, partnership with such as the FMCG you spoke about. And it's more the approach which is important. Are you willing to use enough digital means to evaluate, underwrite, and reach the customer to bring costs down? I think the banks are best placed to do that. Are you willing to still retain the costs of that relationship officer at the last mile? And that's where the banks are changing. They are willing to look at bringing in the type of relationship officers that so far they did not have within their fold. So either they do it through a partnership or they do it themselves. I think we are really at a sweet spot in India, as I said before, to reach this market, with people realizing there is a real business proposition here. It's not only a social development cause. And in the future, this is going to be such a large market, which is going to become a complement to the various types of segments that they actually serve. And they've started to segment this market, which is between the MFI and the bank market. So I'm really excited about the potential of various types of partnerships, not only BC and bank, but others as well.
That's great. Anything else to add, Shweta?
No, I mean, I completely agree with what Veena has said. And I just wanted to provide some sort of examples of why we feel that this RBL and Swadhaar has some of the elements of a successful model. Was quite a few things. One is, as Veena mentioned, was this really seconding of some of the senior managers from RBL Bank to Swadhaar. And I think in terms of shaping the products, credit, the culture, and really understanding what was Swadhaar's take of it. So I think, as Veena mentioned, I mean, the bank had in the past had not really, understood and not done on its own balance sheet this kind of discussion-based lending, which is, without the set of documents. Yet the bank allowed a pilot for about 3 months, and once it saw a huge uptake of this kind of a methodology, they trust the system, and they've allowed Swadhaar to scale it up. I mean, of course, they've put in kind of controls. There are controls in terms of the loan limits, the vintage of the branch before they lend. But I think that kind of trust between a bank and this institution, the service company, is one of the key reasons why I feel that really the bank has been able to leverage Swadhaar's knowledge on the ground, instead of just saying, okay, these are the products, we know that these work, and you go and run with it. So I think these, and lastly, as I remember, as Veena mentioned, was also this kind of risk sharing mechanism that says that, okay, I mean, we trust that you know this market best, and we will partake of it, and it's working very well.
Thanks, Shweta. And before I turn to Nancy, I would love to open up the phone to 2 people that asked similar questions, Kevin Ganga and Christine Gachui. I hope I got your name right. Both of them, Nancy, asked about the importance of data and alternative data in understanding how creditworthy a customer is when they might not have a lot of information that's out there about them that on which would be built a traditional credit score. In the context of my question on partnerships, it seems like this is a particular partnership that a lot of people want to understand a little bit better. So Kevin, are you on the line? Kevin?
Yes, I'm on the line.
Great. Do you want to ask your question?
Okay, my particular question goes around, we are seeing emergence of so many fintechs around, and everyone is kind of developing or getting their own piece of data. So my question was, at what point can this data really be beneficial if the data points, or we are not so sure about the data points, and again, the data is being sourced from different kind of sources. So I was just wondering whether this data will be beneficial to the MSME that we really want to serve.
Great, thanks, Kevin. And Christine Gachui, you had a similar question, so I'll go ahead and open up the line to you. Christine, are you on the line?
Yes, I am. Thank you very much. Can you hear me?
Yes.
It's just a follow-up question to what Kevin has asked, because one of the advantages I'm understanding from the fintechs is that they're coming up with a broader range of data points which you can assess the MSMEs on, and already and to address the issue of limited data or financial statements. So what I want to understand is, in terms of assessing the ability to repay the loan, what type of data points are the fintechs looking at? So maybe that is specifically to Nancy.
Right, sure. Great questions. Thank you so much. I think I'll open this by saying that similar to issues around kind of women entrepreneurship, the issue of data and how useful they are also depends on market to market. I think I mentioned an example of how a country like Mexico is actually now quite thriving with data, because they've now imposed this electronic invoicing method, which really becomes a treasure trove for banks and lenders to be able to tap into. And this is something that the government regulates. So in terms of scale, it populates itself quite quickly and becomes very useful very quick. But I think in markets where we're seeing that there are probably lacking of available data, what we're excited about are models that are now trying to actually start capturing those data through partnership. So we mentioned models like what iFinance and Tienda Pago are doing. Because the businesses that they work with are a bit more informal, they're now trying to leverage, kind of as a first door opener, trying to leverage the existing relationship between these potential borrowers with either the FMCG distributors or with kind of other value chain players, in the case of to really kind of vet the credit worthiness of these potential borrowers. And then as they go along, as they've now built their relationship, they're now starting to capture the data digitally. In the case of Tienda Pago, because now most of the loan repayment from their mom and pop stores are actually through mobile money, Tienda Pago is now capturing that data and now have a track record, have a digital footprint of the transactions for each of their borrowers. And as that continues, they'll have more and more rich sources of data. One of kind of on the point of data and partnership as well, one of our newest portfolio companies is called Lydia, which is based in Nigeria. What Lydia does is actually now providing an electronic invoicing tool for micro and small businesses to be able to use to manage their cash flow, and also to be able to get payments from their buyers in a digital way. This is something that the government of Nigeria has not imposed yet, as in the case of Mexico. But Lydia is coming up with the initiatives like, why don't we provide this for micro and small businesses, so that first we can help them in terms of managing their payments digitally, but at the same time also start capturing this data. And this new sources of data becomes quite rich quite quickly as well. And I think from our experience with our startups, beyond just the data sources, what we are always pretty careful about is also just the capacity for data analytics. Data is data, but the way you're able as a company to be able to sort through the noise of data and trying to be able to pick and choose what data matters and what algorithms you want to use is also key. So yeah, I think in just to summarize, in a lot of the markets, we are seeing that currently, infrastructure-wise, there isn't probably much data, particularly for MSMEs, but we're excited about the innovation that is now mushrooming, that are really trying to capture this data one step at a time.
Thanks so much, Nancy. I'm going to turn to our final question for each of our panelists, and that is going to be what the unexpected findings were from your research. But I just wanted to mention something, a really charming and wonderful comment that John Owens just wrote in. He says, it's interesting that we're seeing now a new rise in third-party service provider and partnership models for MSME lending, because this was actually a topic that Accion was active in over 20 years ago and had some great lessons learned. And he somehow dug into the archives of whatever search engines in the social science research network website, and found an article called "The Service Company Model: A New Strategy for Commercial Banks and Microfinance" that Elizabeth Ryan and Cesar Lopez wrote in 2003. So I'd love to, I'm going to send that link out to the group, because I think it's a really fun flashback, and now I feel like our conversation is more deja vu than something new. But to conclude our conversation, let me turn first to Christy Stickney and ask, what were the, sorry, Beth is raising her hand here in our office and would love to add something.
So I think that we are seeing stuff that's new. I mean, we have the traditional models of underwriting that were around 20 years ago, and really what's the only things that are making things different is that the models of underwriting are changing because of the ability to capture information that was previously just going out into the air and never being used. And so it really dramatically changes the equation for ability to serve MSMEs.
Great, thanks, Beth. And let me turn to Christy with that final question. 2-minute wrap up. What were the unexpected findings from your research, Christy? Christy, I think you're on mute.
Sorry. I think much of what I've shared already was kind of unexpected. So what I would add, a couple things. One is we're mentioning kind of mobile money and electronic transfers and branchless banking and such. At least the context where I was interviewing and conducting research, it amazed me how much of business transactions continue to be conducted exclusively, if not primarily, if not exclusively, with cash. And so that's still a big step that I think we'll see changing in the near future as we move towards some of these other models that have been talked about by both Nancy and Shweta. But they're still highly cash-based. Another one that I pointed to is just the future kind of planning, financial planning for entrepreneurs, and so it's less related to SMEs themselves but more related to the entrepreneurs as they look to the future. How do they provide for their future income needs as they pull back from their businesses? And the practice that arose in the context where I was working, where I was conducting the study, was to invest in rental units as a form of future income. And I think that's an area that'd be interesting to study in the future, is what are the practices of entrepreneurs as they age to provide for their future income needs.
Thanks, Christy. Let me turn now to Shweta.
Yes, I mean, I think some of my interesting findings was really from the focus group discussions that we had. I mean, as interviewers, we went in with the thought that yes, I mean, women entrepreneurs are facing all these biases and cultural perceptions of these bankers. But in fact, when we asked these women entrepreneurs, many of them actually said that they faced some of the same challenges as their male counterparts, and very few women stated that they faced gender biases. Some of them said no, not at all, and just a few stated that yes, there were some gender biases when they went and approached bankers. What I also was surprised to hear is that women entrepreneurs, especially when they're starting out their enterprises, had a preference for public sector banks, at least in India. Public sector banks compared to private sector banks. They said that the managers seem to be more knowledgeable, patient, and supportive of their needs and of their interests to kind of guide them through applying for a new loan. Whereas it seemed like for more private banks, it was more target based and okay, I don't think she's going to fit into our loan product, so let's move on. So that was interesting and pleasant to hear.
Great, and thanks, Shweta. And from my side, maybe there are two. I think first, as we were doing the research and we went through the different business models from our portfolio companies on SME finance and really understanding the types of borrowers that they're serving, I think we are even more aware now that you can't, when we're talking about MSMEs, you can't really put them in one big or even 5 big buckets. There are so many different needs based on their sector, where they are in the growth stage, as Christy mentioned. For a small business that is an event organizer, their need for capital is very different from a small business that produces buttons for shirts. Just very different. I think what's interesting is, as we're looking at emerging markets, the rise of the service industry actually brings in just very different needs of capital compared to the traditionally more kind of production heavy focus for small businesses. So that is something that for us, both alternative lenders and banks and MFIs have just to be very much attuned to really understanding the different business models and what needs are attached to that. And then the second, I think for us is, as we're seeing again this huge technology adoption, digitization everywhere, we are seeing a lot of positive sort of probably unintended consequences to access to capital. We talk about e-invoicing, but last week I was speaking to this fintech startup in Nigeria that is now helping MSMEs digitize their payrolls. So prior to using their platform, small businesses in Nigeria would actually need to do maybe 20 different salary transfers every month using Excel sheets or papers. It's all very messy, very unautomated, and there's just no paper trail. There's no kind of a good record to show whether how much salary expenses is the small business spending every month. But now through digitizing that system, using their software and platform, small businesses are now actually able to start capturing all that. And that is actually will be very useful for them later on if they want to access credit, to be able to show as an indicator of their business health, where they are in terms of growth and so on. So just a lot of, I think we're for financial services providers, we just need to keep an eye on and just be very creative and very, very smart into looking at all this digitization and looking at what are really kind of the pockets of opportunities that we can tap into that might not immediately connect to financial services, but can be a great leverage for that.
Great, thanks, Nancy. Well, just a reminder that in the handout section, you can download the 3 research papers that were discussed here. A special thanks to Nancy, to Christy, and Shweta for joining us. Thanks to Goldman Sachs for funding the research on the BC business models that Shweta discussed, for MasterCard Worldwide for funding the research on innovations in MSMEs, and the Rockefeller Foundation for providing financial support to the CFI Fellows Program and Accion as well. We've had a great discussion today. We'll be following up with those of you who asked questions that we didn't get to, and my apologies for that, but we'll be sure to email you individually and connect you with the right person who can get your question answered. Looking forward to our next webinar, which will be next week on global financial health. So feel free to ping me if you didn't get an invitation to that and want to join us. And thanks everyone so much for joining us. Have a great rest of your day.
Thank you.